Hello everyone, and welcome to Becker and Polikoff's webinar concerning the Paycheck Protection Program and the Economic Injury Disaster Loan Programs. My name is Evan Berger, and I'm an attorney in Becker's Business Litigation Group. I'm joined today by my colleague Stefan Segall, who is also part of the firm's litigation group. Today's webinar will focus on the Paycheck Protection Program, as well as the Economic Injury Disaster Loan Programs. We will go over the qualifications to obtain the loans, the information you need in order to apply, walk you through the process, as will be done by my colleague Stefan, and at the end, answer any questions that you may have concerning these programs. To this end, while we have received a number of questions by email, which we will address, feel free to ask any questions that you may have in the comments section of the Facebook feed, and we'll try to answer as many of your questions as possible. Before we delve into the program, I understand that a number of the firm's community association clients have joined today's webinar. For those of you who fall into this category, I wanted to let you know at the outset that the Payroll Protection Program, which is the most popular program under the CARES Act due to the fact that it is a loan that is easily forgivable, does not apply to community associations. The short answer to the reason for this is that associations do not fit into any of the categories that are covered by the loan. I apologize for any confusion that the invite caused in this regard. That said, Becker's DC office has been actively lobbying to have associations included in future rounds of funding to the extent that there is future funding. Hopefully those efforts and the efforts of others will allow associations to be included at a future date, but as of today, they do not qualify. So if you're attending today's seminar to learn about how your association can apply for this loan, I apologize that it will not be helpful to you in this regard. That said, even if you decided to attend today due to your position on a board, this webinar may be helpful for you depending on what you do for work outside of your commitment to your association's board of directors. By way of background, the Coronavirus Aid, Relief, and Economic Security, referred to as the CARES Act, was passed by Congress with overwhelming bipartisan support and signed into law by the President on March 27th of this year. The economic relief package provided over $2 trillion of economic relief due to the public health and economic impacts of COVID-19. Of relevance to today's webinar, the CARES Act funded the Paycheck Protection Program, which I will refer to today as the PPP, and the Economic Injury Disaster Loan with $349 billion and $10 billion respectively. Due to the overwhelming popularity of these programs, the initial funding for both programs ran out last week. With respect to the PPP program, it's estimated that only about 20% of the applicants were funded through the program before the initial funds were exhausted. The good news is that the Senate has passed a supplemental coronavirus relief package on Tuesday. It's referred to as the Paycheck Protection Program and Healthcare Enhancement Act, and it's colloquially referred to as either Phase 3.5 or CARES Act 2. This will contribute approximately $500 billion for critical economic and public health initiatives. It's expected that the measure will be passed by the House of Representatives sometime today and signed into the law by the President shortly thereafter. Under this bill, $300 billion in new funds will be allocated for the Paycheck Protection Program, $60 billion of which will be set aside for businesses without access to large financial institutions. $60 billion will be allocated for loans for economic disaster aid, and $75 billion for hospitals, and $25 billion for coronavirus testing. As a result, the application and approval process for both the PPP and Eid L loans should reopen in the coming days. If you already applied for a PPP loan and are in the 80% of businesses that have applied but have not been funded, you don't need to reapply at this time. However, you should contact your bank to determine where your application stands in the process and to see if they require any additional documentation. It's also suggested that you gently push them to get your application through as quickly as possible. We're going to begin by talking about eligibility for the PPP. One of the benefits of this bill is that most businesses are able to apply for it. One of the requirements is that your principal place of residence has to be in the United States and that you were in operation prior to February 15th of this year to qualify. As I mentioned earlier, one of the unfortunate exceptions to qualifying businesses are community associations. However, most for-profit businesses with under 500 employees are included, as well as tax-exempt nonprofits, tax-exempt veterans organizations, and tribal business concerns. It also includes sole proprietorships, self-employed individuals, and independent contractors in certain industries that can actually have more than 500 employees if they meet the applicable SBA employee-based standard size for those industries. For the program, the SBA's general stringent rules regulating obtaining loans through the SBA are greatly relaxed. Many of the affiliation standards are no longer in place, and hotel and food industries and other franchises are eligible where they wouldn't be under a typical SBA loan. The new loans are available for any business which, quote, the current economic uncertainty makes the loan necessary to support your ongoing operations. This language is very vague for a reason. When it comes down to it, candidly speaking, I think that coronavirus has affected most businesses to some extent. Although the impact is being felt harder by some than others, the large majority of businesses within the United States have been affected in some way, and the loan will support their ongoing business. So this is good language because it's broad enough that most businesses can, in good faith, certify that they need this loan to support their ongoing operations. Of note, there's actually been a lot of talk this week about adding a new certification which requires that companies certify that they're not able to obtain other funds. This is in reaction to some of the things that you may have seen on the news over the past few days about large corporations obtaining multi-million-dollar loans when a lot of small businesses who this was intended to protect have still not gotten their funding. The one that's kind of been in the news the most is Shake Shack. And the purpose of this new language, to the extent that it ends up making its way into the final bill, will be to ensure that the small businesses under 500 employees, which is probably what the vast majority of those listening in on the webinar today fall into, are protected and are able to get funding under this loan. Now, one of the first things that you need to do if you're going to apply for a PPP loan is to figure out the amount that the loan should be for. Unfortunately, you're going to need a calculator to determine the amount of your loan eligibility, and there's some math involved. The loan amount that a business will qualify for is 2.5 times the average monthly payroll for the 12 months preceding the date the loan is made, up to a maximum of $10 million. Now, in a vacuum, this means you take the 2019 payroll, you divide by 12, and you multiply that number by 2.5. However, that would be too easy, and there's a few things that you're going to have to take out before you can do that math. The first is there's a $100,000 salary cap when calculating this amount. As a result, for any employee that made over $100,000 in 2019, you'll have to reduce the annual payroll by the amount over $100,000 for any employee who's passed this threshold. So for instance, let's say that your 2019 salary was $1.2 million, that all of your employees made under $100,000 except one who made $300,000. By virtue of this, you would have to subtract any amount over the $100,000 for that employee, which in this example would be $200,000. And then from the $1.2 million, you would have to subtract the $200,000. So the revenue that you would be using for 2019 would actually be $1 million, as opposed to the $1.2 million of actual payroll that you paid out during the year. Now, one question that comes up a lot is whether or not the owners of the business can be counted in the salary for 2019. And the answer is yes, assuming that you were salaried employees and that if you made over $100,000, the amount has to be reduced down to $100,000 for those employees. Some other things that are important when making this calculation is that you're not to include any sort of a sole proprietor or an independent contractor when doing the math. The reason for this is both sole proprietors and independent contractors are ineligible to be counted for the business that they work with. And the reason for this is they're expected to apply for their own PPP loan, either as a sole proprietor or an independent contractor. So if they were counted by both the business that they do independent contracting work for and themselves, it would create a situation of double counting. That said, if you have any individuals that are independent contractors for your business, you should encourage them to apply for this, because if they're receiving X number of dollars that they otherwise would have received from you, it's a large benefit to the business. You also have to subtract the compensation for any employee who doesn't actually live within the United States. So if you're a business of 10 people and 2 of them are overseas, you can only count the 8 that are living and residing within the United States. Another question that comes up a lot is how payroll costs are calculated with respect to taxes. Now, if you're withholding tax from a person's paycheck, meaning it's withheld by the business and paid to the government, that is counted within the salary amount up to $100,000. However, the portion that's contributed by the business is not included within this metric. So you can include what comes out of the person's salary, but not what is matched by the business when figuring out this amount. Now, once you've accounted for all of these things and you have your annual payroll number, you divide this number by 12, multiply it by 2.5, and that's the number that you're eligible for under the PPP loan. As I said, it should be very easy, but there is a lot of math involved, particularly if you fall into any of the categories that I just discussed above. Some other things that come up that I've received some questions about are, what if you're a seasonal business or you weren't in business during 2019? You know, for seasonal businesses, the majority of your payroll could be during a short period, and the impact of the PPP loan would not be as great because you're using basically a 12-month basis when you may only have 3 or 4 months of payroll. So if you're a seasonal business, you can apply to borrow 2.5 times your payroll for either the 12-week period beginning February 15th, 2019 and ending May 10th, 2019, or the period between May 1st, 2019 to June 30th, 2019. If you're a new business and we're not in business beginning on February 15th of 2019 through June 30th of 2019, you can use your average monthly payroll costs incurred from January 1st of this year through February 29th of this year and multiply it by 2.5. And of course, the restrictions and caps that I discussed a little bit earlier would also apply for both a seasonal business as well as a new business. Now, one of the most valuable aspects for business owners of the PPP is the fact that if done correctly, it is a completely forgivable loan. This means that any amount that you receive from the government under the PPP loan, if you use for the categories that you're expected to under the CARES Act, it will be completely forgiven and there will be no tax implications to your business, which is a true lifeline for many businesses out there. However, there are some important rules that you're going to need to follow in order to be eligible for complete loan forgiveness under the PPP. The first is that at least 75% of the loan proceeds need to be used for payroll costs. And when that's determined, it's for the 8-week period that directly follows the disbursement of the loan. So for instance, if it's May 1st, your loan is dispersed, you have to use the payroll costs for the next 8 weeks in order to be forgiven. So it would be your May payroll and your June payroll. And that also has to equate to 75% of the loan amount. There's also a requirement that you maintain your current workforce. For instance, if you let people go during the time that you're applying for this loan or after applying for this loan, the amount that's forgivable will be reduced on a percentage basis by the reduced headcount. It'll also be reduced if you decrease the salaries and wages by more than 25% of any employee that makes less than $100,000 during 2019. One question that comes up a lot is that often businesses have already let go employees prior to the time that they knew that the PPP was going to exist. With respect to these employees, if you laid them off, you have until June 30th of this year to restore them to their full-time status of employment and salary levels that they were at as of February 15th of this year. Now, what's important is if you've let someone go, they're really under no obligation to come back. So what the SBA is going to be looking for in these situations is proof that you offered the old position back to the person and that for whatever reasons they chose, they didn't come back. So we suggest that you do this in writing and create a clear record that you offered any terminated employees their employment back. So if it's ever questioned, you have that documentation to show that in fact you had offered these jobs back, but for whatever reason, they did not accept. Now, what are the payroll costs that constitute this 75%? The Paycheck Protection Program final rules have a section called payroll costs, and it's in any of the following categories. So as long as these categories equate to 75% of your loan, it can be completely forgiven. And they're very broad, and I think it was done in such a way that businesses should not have an issue. It includes salary, wages, commissions, or similar compensation capped at the $100,000 that we discussed earlier, cash tips or the equivalent to employees, payment for vacation, parental leave, family medical leave, or sick leave. It can be an allowance for separation or dismissal with the employee. It can be paid for group health coverage, including insurance premiums and retirement accounts, as well as local and state taxes, although state does not apply as much to Florida, on compensation to employees. With respect to an independent contractor or a sole proprietor, the payroll costs would include wages, commission, income, and net earnings from self-employment capped at the $100,000. Now, once this is done, there's still a remaining 25% that can be used by the business and forgiven. There are also certain categories that the remaining 25% would have to be used for there to be forgiveness. One is the costs related to the continuation of group healthcare benefits, sick or medical leave, and insurance premiums, which is actually duplicative of what counts as salary. You can use it towards mortgage and insurance payments with respect to the interest only and not the principal of prepayment of principal. It can be used for rent payments for rent on your business as long as that rent was in place prior to February 15th of this year. So for example, if you didn't have a leased space in February and you decided that you're getting this money, so you're going to go out and get a nice space, that would not be a forgivable way of using the remaining 25%. The lease had to be in place prior to the 15th of February of this year. You can also use it for utility payments, also assuming that they were in place by February 15th of this year, and insurance payments on debt obligations prior to February 15th of this year. And you can also use it to refinance an SBA economic injury disaster loan. Assuming that you comply with all of that, there will be a form that will be coming out later this summer or early into the fall, where you certify what the money was used for, and the loan will be completely forgiven, assuming that at least 75% of it was used towards salary, and the remaining 25% was used for the categories that I discussed a little bit earlier. Now, what happens if, for instance, you're given the money and for whatever reason, employees don't come back, so you don't need it all for payroll, or you don't have other categories that you can utilize the funds for? You can either give the money back to the SBA through your bank, or if you accidentally use it for a category that you thought in good faith was covered, but it's not, it's converted into a 2-year loan at 1% APR interest with no repayment for the first 6 months. So if you use it for something that you believed was covered, and it turns out that you were wrong and it was not covered and you used it in good faith, it's not forgivable, but it then just transitions into a loan that has to be paid back to the SBA. Now, my colleague Stefan is going to go through the process of applying for this soon, but I did want to go through, I have a list here that I pulled earlier of helpful records prior to applying for the loan. You know, it's easiest if you have these documents in place prior to applying because it'll make your life a lot easier, and it's also going to make the process a lot more seamless because the bank's not going to have to keep going back and forth, and you can provide everything at once. So if you are a traditional business, you need to have your payroll processing records, your payroll tax filings, any Form 1099s, or income and tax expenses if you're a sole proprietorship. If you don't have such documentation, you can rely on your bank statements. For all borrowers, you need your master payroll documents. And for certain businesses, to the extent you have these, you need your IRS Form 944 or alternatively 941 and your IRS Form W3. If your business pays health insurance or retirement for employees, you'll also need to provide some forms in that regard. So you should look up the forms that you're going to need if you fall into those categories. If you're self-employed, you need your IRS Form 1040 Schedule C, as well as any 1099s. And if you're an independent contractor, you need your IRS Form 1099 as well. And I'm going to reiterate once again, since I know that some people may have come in a little bit later, for those who are on due to the fact that they're on the board of a homeowners association, unfortunately, the PPP that I just discussed does not apply to homeowners associations. The short answer for the reason of this is that they do not fit into any of the categories that are covered by the loan. And I apologize for any confusion that this may have caused. That said, we are continuing to lobby in this regard, and we're hopeful that to the extent that there are future rounds of funding, that homeowners and community associations can be included in that funding. Before transitioning to Stefan, I would like to talk a little bit about the economic injury disaster loan. This loan has been the less popular of the two under the CARES Act, and the simple reason for it is under the PPP, any money that you receive, if properly utilized, is completely forgiven and does not have to be paid back. Under the EIDL, it's actually more of a traditional loan. It has 30-year term and a 3.75% APR. Those that are eligible for it are typically the ones that would be eligible for the PPP. However, some businesses have found that they can get, equal funding through other opportunities, and it has been the less popular of the two programs. That said, it can provide up to $2 million of working capital to be used for things that are affected by the COVID-19 crisis. The application, Stefan will tell you a little bit about, is not currently available. And one last thing, because it's been coming up a lot, is that one of the reasons that people were very interested in the Eid L loan when it first came out was due to the fact that the language of the bill had a $10,000 forgivable grant that was automatically paid to the applicant within 3 business days of the application being funded. Due to the overwhelming number of requests for this, because most people that had a federal tax ID number were applying for this because they saw it as $10,000 that could be forgiven if used for certain categories. They actually changed the language. So the current language is that you can, as a business, receive up to $10,000. It's $1,000 per employee, and it can be forgiven, and that the time frame for the funding, instead of the 3 business days, is as many as 45 days or more. So it's obviously not as attractive as it was when it first came out, but it could still be an area of short-term funding that's forgivable to a business that could supplement the PPP. And it is worth noting that you can apply for both the PPP and the EIDL. The only key is you can't use the funds for the same thing. So for instance, if you use the PPP to pay April payroll, you can't use the EIDL to pay your April payroll, but you could use it for, say, your May payroll or your June payroll. So those are the basics of the two programs. I'm going to turn it over now to Stefan, who's going to tell you a little bit more about the application process. And once he's done, we have a number of questions that were emailed to us before, but continue to ask your questions in Facebook, and we'll try to answer as many of them as possible during the time that remains.
Am I live?
You're live.
All right. Hi, Evan. Thank you for that introduction. Again, my name is Stefan Segall, and I'm going to walk you guys through the process on applying. And the way that I'm going to do that is I'm going to share my screen. So give me one moment. So what you have here is I have a split screen. On the right-hand side is an outline that I've put together for everyone to follow. And then on the left-hand side, different windows will be popping up throughout the tutorial. So first things first, we're going to do this process as if we're going through a main bank, Bank of America, Wells Fargo, Chase. They all have similar platforms. So click right here. Now, they have these information pages that can sort of be a little intimidating. You just scroll on down to the application information section. As you can see, we're down here at step 2, and you click sign into online banking. Now, right here, you're going to be prompted right to your small business banking page. And something I do want to point out is that certain banks do not have these capabilities right here. And so if that's the case, then what you're going to want to do is download the form directly from the SBA. Now I click that link right here, and here's what it'll look like. It brings you straight to the Small Business Administration's page, and you can download this PDF. Suppose I click that, here's the form that would pop up. Now right here is exactly, it's the same questionnaire, it's the same information that they're seeking. This is just the government's form. So you'll see on the Bank of America website, it's a little more user-friendly, but it's the same content. And I'll come back to this form in a little bit for some questions that you won't see on the Bank of America's initial page. Now at this point, we've logged into our small business account. If you didn't apply, like I have already applied, then you'll be prompted to a login page. You simply put in your login information, and this is exactly what pops up. So let's keep going down the list here. We're on step 3, where we're going to fill out the form, right? Now, whether you have a checking account or whether you have a credit account or simply a checking account, you just go down and circle the answers. I have a small business checking account, inclusive of a credit relationship. No. I have a small business checking account that is not inclusive of a credit relationship. You click yes. And down here, this is Evan went through earlier explaining the calculations. The math is very important because you will later be providing documentation to back up the math that you're demonstrating. And so Evan, thank you very much for going through the math so I don't have to do it because it's not one of my strongest suits. Mathematics, which is why we went into law. However, down here, it's very user-friendly. Again, very simple. Average monthly payroll, suppose I like to keep numbers simple. Your average monthly payroll can be $2,000 a month. So then in your next box, you have your 2,000 times 2.5 plus your EIDL net advance. You do the calculations, you simply fill in the forms, fill in the boxes, and you go down to your number of employees. Very self-explanatory. Purpose of the loan, again, this is very important. As Evan mentioned, you want to make sure that you're checking these things off, you're providing the documentation to support it, so down the road, if you apply for other loans, you're not overlapping. Very simple. This is just your deposit account. At this point, you would just select your bank account that you'd like the money to be deposited into once the loan is approved, and then you hit continue. Now, once you hit continue, I can't bring us through the continued steps because I've already applied for this relief. However, what'll happen is, excuse me, just pulling up the information here. What'll happen is you'll be prompted to these questions. Take a second just to review. For example, look at number 2. Have you obtained a similar loan and defaulted or gone delinquent in the last 7 years? Along with these questions, you'll also answer your address, you're doing business as, where exactly you want this money to go, into what account, and then you get towards finalizing your process. So here we are on step 4. At this point, we've gone through Bank of America's platform, we've gone through all the remaining questions, and we've clicked submit right here. Now, within 24 to 48 hours, you'll receive an email that looks like this. This is Intralinks. And Intralinks is a secure platform that Bank of America is using to facilitate these loans. So right here, you'll get your Intralinks login ID. You'll click the link right here, and then you'll be prompted to the next set of pages where you will set up your Intralinks account. And through Intralinks, you will download all of the forms that Evan mentioned earlier, your payroll forms, your tax forms, things of that nature. So you set up your account, you log into Intralinks, and you proceed to the next set of steps. Now I'm going to make this screen a little bigger because it's very important. At this point, we've logged into Bank of America, our banking page. We've filled out the questionnaire. We've hit continue about 4 or 5 times, filled out more answers, and click submit. In about 2 days, we've received our Intralinks setup account. We have set up that account, and now we're in the Intralinks mainframe. So very simple, you follow the steps. On the left side of the screen, you'll see something called instructions. Now you want to click that, and then down here, you'll get 3 documents. I recommend downloading all of them. It's no harm to you to just have everything, and so you're documenting everything along the way, not to cut corners. Now you download everything. What you have here is your loan amount template, and you should have a good understanding of that by now. Your Ppp Application Addendum, which is very important for Bank of America, and your required document sheet, and we'll get into that a little later. So you download your Ppp Application Addendum. This is just an addendum that is being attached to your application. It's going to have your username, your password, your bank account information, and your address, simple things like that. Now save that and keep it off to the side. We're going to go back to it later. At this point, we're uploading documents that are going with the application. So everything we did prior is your application, and here's all the documents that are going with it to the banks, to the government. Right here, you click Documents, and down below, you'll see that this is highlighted as a reference number. You'll either have a reference number or you'll have the name of your company pop up. Now you just click that. As you can see, we click it right there. A window will pop up that looks like this. Now at this point, as Evan recommended, you're going to want to set aside the documents that you're going to need in advance. So they're just in a separate folder and you can drag and drop. At this point, from off the window, you'll be dragging documents over into this cloud, one after another, And then once you've had everything, once you've gone through your checklist, you hit upload. Some examples of documents we'll need is the addendum, your tax forms, whether you're 1090s or 1099s, your payroll documents, your employee benefit forms. These are all things that you might need. You'll click upload here. Bank of America will be automatically notified that your documents are ready to review. And they'll look at your application and you should hear back. And if you are missing anything, you'll hear back that you're missing those documents. Now, like Evan said, the economic injury disaster loan is not available right now, but I'll show you what it does look like. It's a little intimidating, but for Corona relief and resources, click here. Sure. Suppose we're going with the Eid L loan. Now at this point, as you can see, there's a lapse in appropriations. So they're not accepting applications. What's interesting is that the PPP, most banks, and I see a lot of questions coming through saying that they've applied and they haven't heard back and things like that. And like Evan said, but for those who came in a little late, most banks kept accepting PPP applications and you're in some sort of order, you're in a queue. And so like Evan said, it's best to get on the phone with your bank or get some contact and see where you are and see where you stand. But in terms of the EIDL, they stopped accepting applications until they're ready to approve. And so at this point, you should be through your PPP application, and within a certain amount of time, you'll hear back from the banks. And right now, I think we're going to open up the platform. If anyone has any questions, you can comment in onto Facebook and we will answer them as they come in.
All right, so okay, so we're now going to start the question and answer portion. I'm going to begin with some that were emailed to us beforehand because that's how my form is, and then I've been sent the ones that have been asked in the comments section throughout. I hope to get to as many of them as possible, but if for whatever reason I don't get to your question, or if I'm not able to answer it, please just email me after the webinar, give me a call. My phone number is on my website bio, and I'll be more than happy to answer any questions that you may have or look into it. So the first question is from Andrew, and the question is, what is the maximum amount of a loan that a community association can get without collateralization? And if the association needs more, what are the acceptable forms of collateral? So as I mentioned earlier, if it's under the PPP loan, unfortunately, since this has been asked for a community association, the answer is that there would be none that the association could get under that, due to the fact that it's not under any of the qualifying categories. If you asked with respect to the EIDL loan, that one's a little bit more nuanced. Under the EIDL loan, it allows for private nonprofit organizations to obtain funding. There have actually been no directives or papers coming out that define what a private nonprofit organization is. I've heard arguments both ways actually as to whether or not a community association can apply. One thing that's interesting though, and to keep in mind, is that by applying under the EIDL, what you're doing is you're applying for a 30-year loan at a fixed rate of 3.75%. I've actually heard a lot of community associations say that they can get, better terms just through a traditional bank, depending on the assets that they have. So just because a loan is out there doesn't even necessarily mean that it's the best option. in the event that you would qualify for it. So I think that's something that all of the community associations should keep in mind. But let's assume for a second that you asked the question for a non-community association. It was about collateralization. Normally an SBA loan would require collateral for an amount over $25,000, but on the PPP, the collateralization requirement is actually waived. If it's an Eid L loan, any amount over $25,000 does require collateral to be pledged. And it can be your traditional and typical things such as personal guarantees. It could be property or real estate. One of the interesting things is the EIDL is not supposed to be declined for lack of collateral, but if there is collateral there, you would have to pledge it over the $25,000 amount under the EIDL loan. The next question was asked by Jessica. Is there a personal or business credit check under the PPP? No, with respect to credit, none is required, either personal if you're applying as an independent contractor, or business if you're applying under a traditional business under the PPP. It's not one of the requirements. And then the next question actually from Marissa is a somewhat related question. Is there a personal guarantee under the PPP? And the answer to that is also no. There's no personal guarantee that's required. They're non-recourse loans as long as the funds are used for the proper things that they're expected to be used for. The next question, Gary asks, can I apply for this loan and the payroll tax credit? I think what Gary's referring to is that under the CARES Act, there is a payroll tax holiday and credit where a lot of companies are able to delay and defer the payroll taxes that they have to pay for their employees. So assuming that that's what Gary is asking about, the answer is actually no. If you obtain a loan under the PPP, you're not able to get the tax deferral under the related provision. Susanna asks, what do utilities include? Utilities are your typical utilities, electric, gas, water, I believe phone and internet I've read can be included. The one thing to keep in mind, Susanna, is that they just had to be in place by February 15th of this year. So if those weren't in place, you can't go out and get them now and also have the loan forgiven. Stacy writes, should a CIRA association apply for EIDL? I'm not sure of the acronym CIRA, but with respect to in EIDL, I think the first question I asked was actually very similar. There's an argument to be made that an association can make an application under EIDL as a private nonprofit organization, although that term has been undefined. But should the association apply? It really relates to the needs of the association, what the debt is required for, and if the EIDL can even get them the best rate that's out there, since there might be more favorable rates elsewhere. Jeff writes, can a self-employed individual, a single member LLC who files a Schedule C, add their 2019 health insurance expenses and self-employment tax to their 2019 net income to arrive at a payroll amount eligible for the PPP loan? I think what Jeff's asking is, can health insurance that's paid in the single member LLC entity be included in the numerator for the annual payroll up to 100,000? I think this is somewhat dependent on how it's reported. For instance, just to give an easy number, if the revenue is $50,000 and you use 5,000 of that to pay for your health insurance, the revenue and salary would still remain $50,000 and not 55, since you're taking money that you earned to pay your health insurance. So, what you have to be careful for with in going through these is that you're not double counting, and that, anything in one bucket has to remain in that bucket. So if you already use the money for revenue, because you use that revenue to pay another cost, just because it's you wouldn't be able to double count that amount. Andrea asks, I applied for an Eid L loan on April 1st. I received an application number and have not heard anything. Should I apply again? My recommendation would be no, do not apply again. This can create several issues. The first is that both might be rejected as duplicative, or the first one might be rejected and the second one would be the one that's processed by the SBA. And the issue is with these loans, from what I understand, very few, if any, Eid L loans have been processed yet because the SBA has been so overwhelmed. And the problem is going to be, by applying again, you're going to lose potentially your place in line. Assuming that the application was received, it's in the queue, and they're going to process them in the order that they were received, even if it's slow. So my recommendation would be hang tight, but definitely do not apply again if it's in there and you have your application number. Kathleen writes, I own a barbershop. My employees are subcontractors. They basically rent a chair from me. How do I prove that I have 3 employees that pay a chair rental to me? They all do their own taxes. With this, Kathleen, I think whether or not they're employees or independent contractors would be dependent on how you recognize them. If you give them a W-2 form at the end of the year, they would be employees. If you give them a 1099 at the end of the year, they would be independent contractors, and you would not be able to include them in a PPP loan, and they would have to get their own loan through the PPP. And if they just pay share rental, they may just be tenants as well, and not employees, if they just pay a fixed amount every month. So those would be the documents that I would look at so that you can make that determination for your application. Sean writes, the amount of forgiveness of a PPP loan depends on the borrower's payroll costs over an 8-week period. When does that 8-week period begin? It begins on the day that the loan is dispersed from the SBA, so that becomes day 1 of the 8-week period. Jim writes, what is the likelihood that community associations will be added to the list of those eligible to apply for the PPP? I understand that the trade association is lobbying for that. Jim, unfortunately, I wish I had the answer to that. I can tell you that Becker and Polyakoff's lobbying arm, as well as many organizations out there, are going to bat for community associations and trying to get this funding. To the extent that there are additional rounds, and everyone is doing their best. What ends up making it into a future bill, to the extent that there are future bills, your guess is unfortunately as good as mine, and I don't have that answer, but I can assure you that the team at Becker is doing everything within our power to make sure that that's included in the next round. Fiona writes, what is the payment schedule for the PPP loan, and when do they determine whether or not it's forgivable, and how? The payment schedule, most companies are getting the payment in one lump sum during an initial disbursement. I've seen some examples where it's multiple disbursements, but the vast majority are a single disbursement. As far as determining whether or not it's forgivable, the period of use for these funds is through June 30th, And from everything that I've read coming out of the SBA and through the various rules and regulations is that sometime later this summer, there's going to be a form that business owners that received funding are going to have to fill out, showing what the funds went towards, and based upon the answers to that form, it will be determined if the loan qualifies for forgiveness or if it would have to be paid back by the company. Valerie asks, we are owners of a vacation rental property in Florida and have suffered loss due to cancellations and refunds. We applied for the Eid L loan on April 2nd, but did not receive a payout. Should we keep applying or will our initial application be effective for the second funding of the CARES Act? I touched on this earlier. I would not reapply. The application is in the queue and it should be part of the, hopefully this round of funding. There's quite a bit that's going towards the Eid L loans. The only thing that I noticed is you said you didn't receive a payout. I just want to make sure if for some reason the application was rejected by the SBA or it wasn't approved, instead of applying for a new loan through the Eid L, to the extent that you believe that it was an improper denial, there's a mechanism where you can appeal the decision of the SBA, and you should work it that way and not open another application because it's going to be a lengthy process and likely they're going to see in the computer system that it was denied.
And also, Valerie, not sure your insurance situation or if you have business interruption insurance, but there's a team at Becker that has been looking into the different varying policies out there and who is getting business interruption insurance coverage and who is not, and putting together an analysis to maybe fight for coverage if you've been denied. But in any event, you can definitely email Evan or myself, and we can move forward, take a look at the policy, and see if we can help out.
All right, the next one is I applied via, I'm just going to say bank, I don't want to say the name of it, on April 6th. I'm getting the runaround about approval status. Nobody at the branch level can help. I'm concerned about their ability to get our loan through. I heard PayPal has been really quick. Can I apply with them for the second round, or will it just hurt my current status with named bank? Whatever the status may be, it just keeps saying pending for the last 2.5 weeks. My recommendation would be if the application is in and it's correct, you're in the best position keeping that application in the queue rather than applying through a different bank and essentially starting again at square one. My recommendation would be, though, if they're not being helpful at the branch level, it's a large bank, find out who those people report to, whether it's, a regional manager or a state manager, and escalate it to the extent that you can so that it gets the consideration that it needs and you believe that you're getting the best customer service. But it is a large bank, and I'm sure that they have your best interests in mind. Deborah asks, I have an event photography business and my employees are part-time workers. BBT, I guess that's the banker not accepting applications, but I did apply with PayPal. My revenue stopped on March 15th, and I'm not sure when we can resume our services. I'm not sure of the question, but I'm hopeful that even though the big national bank isn't accepting it, it seems like PayPal, who I've heard not only from people through the comments here, but in other places that they are doing a good job processing these. So I hope that you're able to get the funding that you may or may not be entitled to. Amos asks, what if we started having salaried employees in January of 2020? With respect to that, I can't tell from the question if you were in business in 2019 or if it was a new business. Depending on how it was. I'm not sure if the question is if everyone was, say, an independent contractor in 2019, but they're now a salaried employee. I actually haven't seen that come up before, and I don't know the answer. But if the question, Amos, is whether everyone was an independent contractor last year and this year their employees, how would they be accounted for? I would have to do some research into that because it hasn't come up yet. But if you email me, it's eberger, EBERGER, at Becker, BECKERLAWYERS.com. I will certainly look into that for you and see if we can get that answered. The next question is from Stacy. Does the PPP program apply for a municipality or only a small business? I'm not sure how the municipality would be defined. I believe that there are government exceptions. It may, municipalities, it's kind of a broad word, so I would have to look at the way that, what it's actually doing, is it, part of the county, part of the city, how it's funded, whether it's through taxpayers, whether it's through the state, in order to do the analysis. But if you email me and let me know the name of the municipality and how it's set up, I would be able to tell you whether or not they would qualify. Patty asks, if 8 weeks starts in the middle of a payroll period, would we need to split payroll so that there is a before and an after? It's the way that it works with the payroll is that it's for an 8-week period, but it doesn't take into account payroll. So, by the natural progression, let's say that people are paid on the 1st and the 16th and your funding comes on the 8th. The way that it would work is that it would be on the 8 weeks from the 8th, but half of it, I guess, would be in, payroll period 1, and the other half would be on the last payroll period. So I don't think that there's extra accounting that you would have to do. It would just naturally be that 8-week period in the middle. And if ever questioned by the SBA, you could confirm this through your books, that this money was used, half in one period and half on the tail period. And it should line up that way through the full 8 weeks. So it's more about what the 8 weeks of payroll is, as opposed to the individual kind of days in there, if that makes sense. John asks, what about bonus and healthcare? If a bonus was part of your salary and pay in 2019, that would be included. The only caveat to that would be is that if you made over the 100,000, it would have to be reduced. Healthcare, it would depend on how you set it up for your employees. I've seen it a few ways where healthcare is counted in their salary. I've seen some where an employee pays part, but if, when you're accounting for healthcare, let's say somebody makes $50,000 a year and their healthcare is $5,000, their true salary is $55,000, and usually I've seen businesses allocate the full $55,000 because the health insurance that is technically paid by the employer is then usually taxed to the employee. So if you do it that way, I believe that you can count the health insurance because it's part of their salary package. And then we have time for one more, I'm being told. So I see that I've got, I think 47 open questions. So, I apologize. I wish that I could, get to every one of these questions, but I will reiterate, I'm easy to get a hold of. My email at the firm is eberger, EBERGER, at Becker Lawyers, BeckerLawyers.com. You can find me, Evan Berger, on the webpage. Stefan's also very good at responding to things. He's SSEGALL, also at BeckerLawyers.com. You can find him on the webpage. So we apologize that we just, physically can't get to all these questions in the hour that we were allocated, but, please reach out. I can't promise that I'm going to be able to respond today, but I do promise that, I'll respond as quickly as possible to all of you. And then,
I will,
yeah.
Evan, sorry, I do want to address one thing. I see a lot of repeat questions here asking about banks and the whole process that I went through. Just to answer all of you kind of at once, if your bank does not have these kinds of applications, then you print out that standard form that I had, give your bank a call, see if they accept those forms. If not, just call a few of the local banks. If you don't have your business account, for example, at Bank of America, but you have a personal account there, call and ask and see, are you guys accepting PPP application forms? I have a personal account with you. I have all of my documentation. My application is ready to go. If they say yes, that's great. If not, just try a few other banks. But I do know that a lot of the local banks a lot of the smaller banks too, are accepting applications from those who do not personally bank there.
Absolutely. All right, so the last question before we unfortunately have to sign off comes from Lara. And the question is, can realtors apply as independent? I definitely know the answer to this one since my fiance is a realtor. So assuming that you are an independent contractor and that's how your taxes show, yes, independent contractors are eligible under the PPP so that you would be able to apply through that. So Stefan and I thank everyone for joining us today. I hope that everyone learned a lot. We would, as parting words, just encourage everyone who has not applied yet. The applications are in the process of opening up. They filled very quickly the first time. We encourage you as soon as possible, get your documents together and get that application in because they do seem to be processed to some extent in the order that they're received. And it's more likely than not that this round of funding is going to be exhausted sooner rather than later. So thank you, everyone, and I appreciate you joining us today.
Thank you, everyone.